Hi there, I'm Tyler Ballhorn, and this is the Stockscores Market Minutes for October 25th, 2013. Before we get into this week's analysis, I want to talk a little bit about a good morning routine for active traders. You know, every day there are new stocks that have captured investor attention, either because of rumors or often because of news that has been released after the close of the previous trading day. These stocks have the potential to make big gains in a short time period. The key is to focus on stocks trading abnormal volume early in the day that are also up early in the day. If the strength is out of a good intraday chart pattern, then these stocks often make a significant move through the rest of the day and even for days that follow. As an example, here's a stock from this Friday. You can see that NVGN came alive early in the trading day on Friday, as evidenced by the price gain where it went from 475 to 510 in the first hour of trade, and also in the increase in volume over the previous days. Now we can find these things using the Stockscores Market Scan. Let me show you how I do that. Now you can start running this market scan about half an hour after the market opens, and simply look for stocks that are up more than, say, 3%, trading volume that is above average. So I'll say today relative to 20-day average above, breaking through some resistance, say 5-day resistance breakout, and set a minimum number of trades. Now if you're looking at the US stock market, I would favor a minimum of 1,000 trades per day. And if you're focused on the Canadian market, I would set that to 200. Now, as I said, run this about half an hour after the market opens or any time in that first hour, and you're going to find the stocks that are coming alive early in the trading day. Now, I'm doing this after the market is closed, so the list is a lot longer, but the idea here is that you're going to catch those stocks that are trading up, that are trading more volume than normal, then check their charts using the chart viewer. Simply say select all. Go into the gallery view and view the intraday charts of these stocks. Now I've got this set right now to look at the daily charts, but if you want to look at the intraday, just select the 10-day symbol there and blow it up, and you can see here's a stock that was, yes, trading more volume than normal, but it wasn't breaking from a good chart pattern. And I continue to cycle through until I see those stocks that are showing me some signs that they're catching investor excitement early in the trading day. And if you can catch those, in this case, catch this one in the first 45 minutes at around $1.10. In the next hour, the stock's at $1.35. That's a 20% gain in an hour. And it's all about catching those stocks early in the trading day. All right, let's get into the regular weekly analysis. The S&P 500 continues to lounge around the top of that upward sloping channel, and there's really no sign of weakness in the U.S. market. My only concern is that it's at the top of the channel, and that sets us up for a pullback. You can see it happened in a number of times in the last few months. It happened here. It happened late in July, early August. It happened again mid-September. It simply makes some sense, given the gains that the market has made in the last little while, that we will see a pullback in the near term. However, still no sign of weakness, so we must remain bullish, just with caution. The TSX continues to be the outperforming market in North America and really in the world. It's one of the top performers over the last week or two, and that is all on the back of a weak US dollar, which is helping commodity stocks. Canadian banking stocks are doing very well. I think this market looks very strong long term, but given the gains it's made over the last 2 weeks, I also think it is ripe for some short-term profit taking. Look at that as an opportunity to buy some of these names. U.S. Treasuries rising bottoms into a flat top and a breakout from that in the last week. That is a sign that Treasury prices are likely to move higher in the near term, which means interest rates go down. So if you're thinking about locking in your mortgage, I would wait a little while, as it does look like interest rates are headed lower in the near term. China market, interesting how it broke down this week. It broke that upward trend line. It broke down from low volatility. That's a negative for the Chinese market, and that puts a little bit of a negative hit on what is going on in the commodity markets because, of course, they are dependent on what goes on in China. So a little bit of negative there. It does have some support in around that $35 mark on the FXI. So not considerable downside, but it is somewhat concerning to see that pull back in the way it did this week. Now, as it follows then, the emerging markets also suffered a break of their upward trend line. I think this is simply a case where we're going to see these emerging markets go sideways for a little while. They're building some momentum, they're building some confidence, and ultimately I think we break through that red line of resistance. It's just going to take some time. I would look for really strength in emerging markets to come in next year, early next year. US dollar weak, and that is a positive for just about everybody in the world because a strong US dollar is weak for global economies. Here we've got a weak US dollar, and that is supportive for commodity prices. It helps foreign markets do better. So generally that's good for the global economy. A little bit of a negative for the US stocks. We'll see how that fares. Gold is flirting with its downward trend line, and I think it's a real important chart to watch in the next little while, because if we get a break of that downward trend line, and keep in mind that downward trend line has been in place since early in 2011. So if we do get a breakdown here, a break of that downward trend line here, we want to get optimistic about gold stocks. I'm starting to nibble on some of the gold names in the near term, but I think you have to be slow and cautious with that strategy right now. It's just early stages of a reversal in gold and also silver. Silver's chart is very much the same. Oil has suffered some selling pressure in recent weeks. I think it's probably getting a little oversold. See it bounce back in the near term. I don't see much more downside for oil, but with that said, we still want to be somewhat cautious because the sellers are in control in the short term, although in the long term I am neutral. Fear is in a downward trend. We've been saying that for a long time. We get little blips every now and again where the VIX jumps up. Wouldn't be surprised to see that happen again soon, given the fact that the U.S. stock market is at the top of its channel and due for a pullback. That should bring some money back to the VIX. But right now, fear is not a factor in the stock market. So I am bullish on U.S. stocks, but cautious. Bullish on Canadian stocks, not as cautious, perhaps a little pullback in the short term. Neutral on gold, could break the downward trend line anytime, in which case we'll need to get back to bullish, and neutral on oil. U.S. stocks are strong, but with a high potential for a pullback. Canadian markets are in the early stages of an upward trend, but due for a short-term pullback as well. Gold is threatening to break its long-term downward trend line and move higher. The 2 months of selling in oil should end soon with a bounce back in the short term. Well, that has been the Stockscores Market Minutes for October 25th, 2013. Have a great week in the market and trade well.